Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. So first of all, congratulations to everyone who caught the gold breakout last week. We went through this in detail with you on gold asset of the day and also the week ahead commodity report, where you wanted to look out for that counterflow at the start of last week, an opportunity to buy on the dips, especially where we had the fake out move on Wednesday. We had a flush out on gold back below $1,700, which provided a fantastic opportunity to reload and build further positions. In fact, banking us 530 points just on Friday. We've now established 3 positions in the latest week, all of those in profit into the close on Friday. And we've of course continued to see gold gain into the close on Friday, not only in fact gold but also silver as well, on uncertainty about Trump's response to China. And this of course has spurred further demand for the precious metal. So with that, let's move over to the charts and I'll talk you through exactly what we're looking at here as we go into a new week. Firstly, be aware that on Monday, of course, it is the first trading day of the month. So it's going to be the 1st of June. As such, we want to look out for whether, number one, whether we're going to get a gap higher here on the open for gold, especially given the intensifying riots that we've seen across the US over the weekend, of course, in the backlash over the death of George Floyd. And also the handling of this by Donald Trump has not been the most optimal either, with Twitter deleting Donald Trump's tweets on Friday. And with that, we of course continue to see that uncertainty vibrate through to the financial markets, with gold continuing also to get a bid here as well. Now, when you're looking at gold, as I've mentioned before, you need to keep a very close eye on the gold to silver ratio as well. The gold to silver ratio on Friday broke down 2.5%. It broke down to 96.8 to 1. With that, we've seen silver break out 2.4%. Gold effectively broke out 1% on the peak, but you can see right now that silver is leading the move. I mentioned this in detail last week on silver asset of the day, that you wanted to watch for silver dips as buy opportunities as long as silver continued to maintain above, on a closing basis, $17 per ounce. And that's definitely what we saw last week. We had several sell-offs on silver, but all of these turned out to be the typical counterflow that you get at the beginning of the week, which I'll explain in detail with you on gold very shortly. But this all led to a breakout later in the week here on Thursday and Friday. And this is where we've had, of course, the push higher back towards the swing highs here. Silver closing at $17.83 per ounce. I would be watching out again for a further push higher here on silver going into next week, especially if the gold silver ratio continues to break down. The next key levels on the gold silver ratio would be 95 to 1. So with that, let's just move it over to gold and exactly what we were anticipating last week. So as we mentioned, we were looking for the potential for the counterflow to get delayed because we had a bank holiday in the US on Monday and the UK on Monday. And as such, we could then get the pressure to the downside into Tuesday and Wednesday instead of Monday and Tuesday. So with that, what we have seen, of course, is the sell-off on Tuesday, the typical weakness that we see, and the flush out on Wednesday. And this is where a lot of traders have been trapped and effectively flushed out of the move. Number one, because they've FOMO'd in right at the highs here, where they bought in above the 7.5-year highs. So effectively, any traders getting in from 1760 to 1765 would have had to withstand quite a significant sell-off, and a lot of retail traders would not have been able to withstand that sort of a pullback and flush out all the way down to 1693. Now, as many of you are aware, and likely you were already anticipating this as well, we were looking for this pullback. In fact, we were welcoming a pullback on gold last week for the opportunity to sniper in and just get some fantastic entries here right at the lower end of the channel here and on the usual Wednesday counter flow. And that's worked out perfectly for us to build positions sub 1700, and then on Friday bank 530 points profit, still with 3 positions on gold, all in profit going into next week. So that's lent to a perfect scenario. And what have we seen here? The Thursday Friday breakout. Also, we've cleared above the bull flag formation here, where you can see we've now broken and closed above that channel. So now going into next week, you need to be mindful that we have a European Central Bank announcement on Thursday. We also have Friday's non-farm payroll data, but at the first day of the month, Monday the 1st of June, we want to watch out for whether we can see some follow through here, either off the gap of the Sunday open, whether gold will gap a higher or not, or whether we do get just a push higher off the back of that typical first of the month buying that can come into the market. So what I would look out for is whether gold can push higher back above Friday's highs here, effectively take out 1737, and from there build momentum back towards the swing highs. Now, if that doesn't happen and we do see the typical weakness that you can get at the beginning of the week, then very simply I would look for range bound price action back towards the levels where gold found support last week and resistance as well, consolidate until we then potentially have that breakout later on in the week. I am looking over June here. I am looking out on gold here for a revisit back towards the swing highs, but I would pay very close attention to silver, which is leading the move at the moment. So it's not far away from $18 per ounce now. And in fact, if we do see a full-on breakdown of the gold silver ratio next week, that's where silver can start to get going for a revisit back towards the swing highs here, which would take us back towards the January highs of 2020. And that's, of course, where silver then can catch up to the price action with gold. So what we've seen so far this year is gold at the start of the year breaking out to 7-year highs. However, silver very much lagging behind. The gold silver ratio, in fact, in March got to the highest it's ever been in history at 125 to 1. This is where silver broke down to 11-year lows and gold pulled back to 3-month lows. Subsequently, silver has had a tremendous recovery here, and typically it can take up to 6 months in terms of lag time for silver to catch up to breakouts from gold. Again, note that gold has broken out above the 7-year highs. An equivalent magnitude move on silver would take the price above $20 per ounce, and that's absolutely worth having on the radar whilst the gold silver ratio is breaking down this fast, because we've seen silver over the month of May so far been an extremely lucrative month here for silver. It's up 19%. It's the best month since 2016, since we had the breakouts from Brexit on silver. So it's absolutely a market that you want to have on your radar alongside gold. And I congratulate everyone who managed to capitalize on the breakout here. So certainly from the comments that we've had on gold asset of the day, last week's week ahead commodity report, I'm really pleased that many of you caught that breakout. And I've mentioned it before, but this is where trading purely on 100% technical analysis is not going to give you an edge in the market. You must understand the cycles, the seasonality, the intermarket correlations, the day-to-day flows with gold during the course of the week, and also be aware of macroeconomic data, and then marry that up with the positioning from the hedge funds and money managers instead of what the retail traders are doing, who are predominantly getting stopped out the market. Let me show you a great example on crude oil at the moment. So many retail traders got this completely wrong last week. They were selling into oil after they saw the correction here on Wednesday, and what did we see later on in the week? Hedge funds and money managers have significantly increased their net longs again in the latest week. We've seen now a breakout and clearance above 35 US dollars. I mentioned last week that I was looking for consolidation, range bound price action between 31 to 36 US dollars per barrel. We continue to see that, but overall you did not want to be selling short, and we've continued to drive higher here into the close off the back of the optimism following on from Donald Trump's press conference on Friday. Now, as we go into next week, I would pay a lot of attention to the $36 per barrel handle. If we can get a break and close above this level, it does then provide the opportunity for oil to start to make a move to fill that gap at $40 per barrel. Remember, oil likes to move within magnetic levels. It likes to move within these very key round numbers, especially the $5 handles. If you break and close above $35 to $36 a barrel, I would anticipate we're going to make a move back towards the $40 level. We've seen hedge funds and money managers yet again in the latest week increase their longs. They've reduced their sell shorts. Now, on the flip side of that, if we don't manage to build momentum above that zone, and again it needs to close above $36 a barrel, this is where you can then rotate back towards the lower end of the channel and look for more range bound price action, and that's what you want to be observing going into next week. The major news items that you want to watch out for, which can be catalysts for that move going into next week, will be Tuesday's API data, Wednesday's oil inventories, and also Friday's Baker Hughes oil rig count as well. Now, I'll bring you back to gold here because I'm really pleased that so many of you have been able to capitalize on our analysis in the latest week. And of course, trading is recession proof. It enables you to generate profits fast, which is recession proof, and this is of course where you can make your capital, your wealth, work hard for you. As I'm sure you're aware, and I've mentioned this before, but capital sitting in a bank account at the moment right now is earning very little interest. In fact, many banks around the world, Europe is a great example, have moved to negative interest rates, and this is where you need to take control of your capital, make sure that your money is working hard for you and generating you a return which is recession proof. And not only that, it gives you an opportunity right now during the lockdown as we go through the pandemic with COVID-19. It gives you just a fantastic opportunity to upskill for post COVID-19. So once we come out of this, you are then going to have the ability to manage your capital, to grow it, compound it. But not only that, you've upskilled your skill set where you can generate a recession-proof way moving forward of generating cash flow. So with that, if you would like to become a member of the Gold and Silver Club and learn a research-driven approach to the markets where you have an edge in the market, unlike the retail traders there who are only using technical analysis, you want to be positioning yourself the same way as the big money in the market, the hedge funds, the money managers, looking at the data that they are looking at. Be aware of the cycles, the seasonality, intermarket correlations, trade flow, macroeconomic data. Utilize our in-house market intelligence and research. That is what will give you an edge in the markets. So if you would like to join a community of successful traders, there is an opportunity for you to do so. As a member of the Gold and Silver Club, you get access to our exclusive live trading room webinars. You also have access to real-time trade alerts, trading research and market insights, access to our private Members Academy website, and also support and one-to-one mentoring. For more information, please just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.